Welcome to Better with Money, a channel where we uncover the biggest moments that changed the world economy forever. From stock market crashes and financial bubbles to economic recoveries and global recessions, we break down the events behind the headlines to help you better understand how money shapes the world around us. In today's episode, we'll take a closer look at the Asian financial crisis that unfolded between 1997 and 1998. The Asian financial crisis, often referred to as the Asian contagion, was a devastating economic collapse that swept across East and Southeast Asia during the late 1990s. It first erupted in Thailand in 1997 after the Thai government was forced to release control of its currency, the baht, when officials could no longer protect it from massive speculative pressure. As the value of the baht rapidly collapsed, panic spread throughout Thailand's economy and soon reached neighboring nations such as Indonesia, South Korea, and Malaysia. One major reason behind the crisis was the enormous amount of foreign debt accumulated by many Asian economies. Throughout the early 1990s, these countries had borrowed huge sums from global banks and foreign investors to finance development projects and fuel rapid economic expansion. But as economic growth started slowing and local currencies weakened, repaying those international loans became increasingly difficult. Another key issue that intensified the crisis was the inflated value of many Asian currencies. Before the collapse, several countries had tied their currencies closely to the US dollar, a strategy that initially helped maintain economic stability. However, as the US dollar grew stronger, Asian currencies also rose in value against other global currencies, making exports more expensive and reducing their competitiveness in international trade markets. Alongside these economic problems, speculative investments in property and stock markets became widespread across the affected countries. Investors poured billions into these sectors, pushing prices to unsustainable levels and creating dangerous asset bubbles. When those bubbles eventually burst, financial markets crashed and the crisis deepened even further. The Asian financial crisis caused severe economic damage throughout the region. Many nations fell into recession, businesses shut down, and unemployment surged dramatically. Banks and financial institutions collapsed as well, creating serious shortages of credit for companies and ordinary citizens. In response to the crisis, the International Monetary Fund, known as the IMF, stepped in to provide emergency financial assistance to several struggling economies. In return, these countries were required to adopt major structural reforms, including cutting government spending, opening trade and investment markets, and privatizing state-owned industries. These policies sparked major controversy and triggered widespread public protests in several countries. The Asian financial crisis also sent shockwaves throughout the global economy. Demand for imports from the affected nations dropped sharply, hurting countries that depended on trade with the region. It also weakened investor confidence in emerging markets and increased fear across global financial systems. In the years that followed, many Asian economies introduced significant reforms designed to strengthen their financial systems and reduce reliance on foreign borrowing. These changes included stricter banking regulations, improved market transparency, higher domestic savings and investment levels, and efforts to diversify export industries. Join us as we continue exploring the history of money, markets, and economic power, discovering how decisions made by governments and investors continue to influence our world today. Whether you're an experienced investor or simply curious about finance, there's always something valuable to learn here on Better with Money. Stay tuned for more upcoming financial documentaries, and don't forget to subscribe so you never miss our latest stories from the world of economics and finance. Thanks for watching.